Hello, dear friends. Gold standard limits the ability of central banks to control monetary policy. Opinion piece. Back to gold standard. Unpayable debt. Gold will set us free. The world is shaking. Monetary turbulence. BRICS change the game rules. Expansion of cryptocurrencies. Let's start. The signs that the gold standard is returning to global monetary policy are evident, says the president and editor-in-chief of Forbes, Steve Forbes. The expert highlights several aspects that support confidence in the return of said economic and financial system, including the decline in confidence in the dollar. In quotes, "It's hard to believe, but the world is beginning to lurch toward a gold-based monetary system," Forbes notes. The gold standard has a bad reputation among economic and political and financial experts. But this monetary regime worked effectively despite all the myths surrounding it, Forbes maintains. It benefited in particular the US itself, which enjoyed impressive economic growth for decades, a rhythm that was lost with its abandonment. In a monetary system in which a country's currency is linked directly to a specific amount of gold held by a country. According to the expert, among the signs of the return of gold in the fundamentals of the world monetary system is the increase in the volume of purchases of the precious metal by the central banks of powers such as China, India, Russia, and others. These countries are reaching to growing doubts about the long-term value of the dollar, he says. The gold standard was a monetary system in force in the 19th and early 20th centuries, in which the value of a country's currency was backed by gold reserves. It provided some price stability and fixed exchange rates, but also has disadvantages such as money shortages, rigidity of economic policy, and vulnerability to external shocks. After the First World War and the Great Depression, the gold standard was gradually abandoned. Cryptocurrencies. Another important indicator is the expansion of cryptocurrencies, whose popularity is due to the growing distrust in fiat money, notes Forbes. The main disadvantage of cryptocurrencies such as Bitcoin is the lack of a stable value, which makes them difficult to use in commercial transactions, especially long-term contracts. The analyst assumes that over time, the cryptocurrency market would link its value to the gold equivalent. In quotes, there are several cryptocurrencies linked to gold, but they have yet to gain credibility and mechanisms for their widespread use. However, this situation will change as governments develop their monetary policies, he details. With the world's total debt today exceeding $300 trillion, three times its gross domestic product, global society will inevitably face a crisis that will not be easily repaid, Forbes warns. Finally, the analyst emphasizes the changing role of the BRICS. The group, initially made up of Brazil, Russia, India, China, and South Africa, defines itself as an association of emerging markets and developing countries, founded on historical ties of friendship, solidarity, and shared interests. In 2023, the BRICS invited Saudi Arabia, Egypt, the Emirates, Ethiopia, and Iran to join. After the accession of 5 new states, the BRICS represent almost half of the world's population, more than 40% of global oil production, and 25% of world exports. Russia leads the process for the de-dollarization of world trade, given the use of the currency as a geopolitical weapon in Washington. Forbes notes that the financial activities of the BRICS are starting to change things in the global monetary sphere. Specifically, it targets India's financial operations with gold-based government bonds that it has launched since 2023. In quotes, gold bonds are likely to be very popular among investors around the world. From the beginning of the floating currency era in 1971 until today, gold bonds with a yield of 4% would have outperformed all markets of stocks and bonds in the world. The analyst quotes monetary expert Nathan Lewis. Economy. Silver doubled during the last Asian financial crisis. An ounce of gold could reach $3,000 by the end of the year. X22 report, Bitcoin and gold are expected to rise rapidly. The economy collapses. India and Indonesia stand out among emerging market investors in aging world. President Modi says he feels guided by Providence to govern India. Russia did not charge interest on Turkey's overdue loan. Hungary blocks EU plan to finance Ukraine with Russian assets. Amazon makes profits in Europe for the first time in 7 years and earns $2,081 million. Thousands of people protest in Madrid against Sanchez and the amnesty law. Opinions. Commodity culture. Steve Hanke points out that the vast majority of retail and speculative positions in the gold market come from China. Steve believes that the fundamentals of the metal are very strong, and although the buying from the East has started the first phase of the current bull market, the second phase will begin with the West catches on. When the West catches on, in his opinion. Atlantis report. As major economic changes are experienced, the possibility of a crisis is no longer the speculative talk of conspiracy theorists, but is backed by hard data and exhaustive analysis. We are in conditions similar to the 2008 financial crisis, with persistently high inflation and a Fed that is willing to take drastic measures to combat rising prices. It is a storm of economic problems that could lead to financial disaster. Juan Osabin talks about what's coming. We are just at the end of the first phase. There will be much more to come. There will be some exciting moments ahead. The dark side wants a war, but there won't be one. Huge economic changes are coming. Not everyone will be happy. Some of the changes will encourage foreigners in an irregular situation to want to return home. There will be a time like at the coming of Jesus where the people will turn to God. We are in transition according to Goldilocks. We are in transition that has taken a long time, but the change in the global economy is beginning to take a different shape. The new asset-based trading system has become a driver for the global economy to interact with the new electronic settlement protocols to keep pace. The new payment system has now become a competitive advantage for countries that are more advanced in the new QFS. China is driving the gold market to new highs along with the new BRICS nations. Hong Kong is one of the few open market economies we have. Vietnam is about to become another in July. There will be many more changes, and the exchange rates will be determined by this event. Gold will set us free. And that's all for today. Thanks a lot, dear friends.